And we are live. What's going on, guys? It's Ricky with TechBud Solutions. Hope that you guys are all having an amazing Sunday. Today it is August 10th, 7:59 p.m. here in Arizona, and we are live. So I wanted to quickly go live. I don't want to take too much of your guys' time, but I normally like doing this every single Sunday. So if you are just getting into the market, just another reason to subscribe. And we like to break down a series of stocks, around 5 stocks that our viewers ask me to. But on top of that, we like to talk about what to kind of look out for the week, right? Economic reports, if there's anything significant happening, like this week. This week there is an inflation report. It's known as the CPI data report. Let me actually see for those that are tuning on in. Who has not paid attention to a CPI data inflation report before? Who has never seen? There can't. If you're tuning on in right now, you guys have to be familiar with it because they happen every single month, right? This is the part that's going to be quite interesting. It's for those that do not know. We do provide it for you guys within techbudsolutions.com under trading tools. It's a real-time economic calendar. So if you click on this week, Monday, there's really not anything too significant. But as you can see on Tuesday, August 12th, 1 hour before the market opens, so at 8:30 a.m. Eastern time, we have the CPI report. We have CPI and core CPI, and it is expected to rise. If that is the case, this is the third consecutive month that inflation is rising, going against the target of what the Federal Reserve has wanted, right? The Federal Reserve had a 2% target. I think at the lowest point we hit 2.4%, but we did not hit that 2% target. And then Trump was raising tariffs. The Federal Reserve wanted to be precautionary, so they started to pause, right? A little bit more than what was expected. But it seems like, according to the Fed rate monitor tool right now, which is also provided by investing.com, they stated that there's like an 80% probability that in September, the Federal Reserve could actually possibly cut interest rates, which is what the market wants, right? So a lot of you guys know that I believe markets are overbought. But if they do begin to cut rates, markets can go up even higher. And it's really important to acknowledge that, right? You can have your personal opinions and your personal bias, but remember, I don't dictate the market's direction, and neither do your opinions, right? It's being just making sure that you're aware of, okay, well, if this happens, how would the market react? And just understanding that. So just wanted to make sure, out of everything that is going to be reported this week, there's also the PPI report on Thursday, and that's the Producer Price Index report. It's inflation on the producing side of things. That also gets tracked on Thursday. And let's see if there's anything too significant on now. Michigan Consumer Sentiment report. Nothing too significant. It looks like it's just going to be Tuesday. Everyone always just cares about the consumer. Consumers are what the market cares about. It's the CPI data report, inflation on the consumer side of things. And we can talk about this, I would say, tomorrow, right? Because Monday, maybe my second video for the day, can be breaking down the inflation report, looking at previous inflation reports if you guys would like me to do so. But just wanted to make sure that you are aware so there's no surprises. So randomly, on Tuesday, right before the market opens, there's either going to be a big green candle or a big red candle based off of how the inflation report comes out. That's going to be on Tuesday. So this is a great reminder for bag holders. Do not take a bad trade tomorrow on Monday and then bag hold that position, because you might be surprised on Tuesday. Just a little joke, right? I guess it could be a good surprise if it goes in your favor, right? Depending on what you're bag holding. So let's go ahead and jump right into it. For all those that are tuning on in right now, again, if you want me to break down your top stock, all you literally have to do is share it in that live chat. So as long as you're subscribed to the YouTube channel, you should be able to partake in that live chat, and I can answer any question that you guys might have. So with that being said, also for all those that are part of my LPP team, LPP 3.0 is now available. It's the most recent update, and just like I agreed back when I first made it in 2018, if you purchased it back in 2018, you've gotten access to all of the updates at no additional cost. So LPP 3.0 is now available for anyone that signs up for LPP. This is what now you'll be buying, but anyone that previously had access to LPP, you also get access to the update. So I just want to make sure that you're aware. LPP includes everything from the lesson library, the daily live trading sessions, and the LPP group chat. So it's all included, one-time payment, lifetime access, second link in the description down below. Just wanted to make sure that you guys were all aware. So again, if you've been waiting for the update, it's officially out. All you have to do is log in to your course on Teachable, and then it should be under courses, okay? All right, I want to break down stocks that we don't normally break down, because with the inflation report being released on Tuesday, it looks like markets are already gapping up. They're up about 0.22%, but that really doesn't mean much, right? It's overnight hours. Anything can happen overnight. Markets are still incredibly bullish based off of last week's performance. Higher highs and higher lows, so let's make this very clear. Market sentiment and market direction are in favor of the bulls. Is the market a really good deal? No. Is the market incredibly bullish and has great price momentum? Yes. So as of right now, everything is pointing up. Let's make sure that we establish that, right? A lot of you guys, I was actually really surprised. I talked about a very boring company this morning. I had no expectation, no good expectation that I was going to get good feedback on that video. And I was so surprised that I think it's because how I talked about UPS that so many of you were like, hey, I really like the way that you broke things down in this video. It didn't have to do so much about the stock, but we broke it down on the technicals, we broke it down on the fundamentals, and we talked about how it could be a good deal, but how things would have to change. And again, we made it very clear that there's no intention of buying it right now. It's just something that maybe is worth watching. So I appreciate for all you that took time and watched today's video. I appreciate the feedback and would love to make more. So let's go ahead, and I like ELF. So I don't think I've broken that one down in some time. So ELF Beauty. Yikes, this thing's all over the place. So this thing was incredibly bullish, right? So this was during 2022. Oh, that's odd. Well, end of 2022 to 2023. Very bullish, higher highs, higher lows, and it looks like then sentiment began to change. Do you kind of see that? Lower highs and lower lows. At least that's how it's been since its downfall of 2024. So it's been making lower highs, lower lows. One thing that I love to share with our LPP team is that different time frames give you different perspectives. On the 30-minute or maybe on the 5-minute, this could look like a dip buy opportunity, right? Because it looks like it just recently pulled on back. Cool, I can buy it at 100 and possibly sell it at 125. But then when you look at the day chart, you're like, whoa, this tells me a different story, right? We're getting rejected at a previous resistance range. It has a gap down, but it has a much further or lower support at $50 per share. So just something to pay attention to. It looks like overall direction has been more bearish than bullish. So in the short term, I can't be surprised if more selling pressure does present itself. I do agree with you that if you're looking at it because you see signs of a possible support at 100, I do see that. Maybe it will find a support at the moving average. What used to act as a resistance, right, is now acting maybe back as a support. So we'll see if it retests the support and comes back up to retest previous highs. That would be a great setup for a possible reversal, right? That would be great for the bulls. That it's okay, it's not trying to sell off and make new lows anymore like it was before. It's actually establishing a support and trying to form higher lows and possibly higher highs. But I would give that time. There's no reason to try to predict when all you literally would need to do is set alerts and prepare. So that's the first one. Let's go ahead and look at the next one. Nphase. We talked about Nphase today or yesterday. I cannot stand companies like this. So yes, in the short term, Nphase has been pushing up. Maybe it's just me, but I think that these companies are complete bullshit. Because if you're familiar with Nphase was an absolute gimmick, right? Very similar to what I see Palantir kind of setting up to be. Nphase, in my opinion, was a little bit more gimmicky, but it pumped up, became incredibly overvalued in 2022. Its CEO, just like Palantir's CEO, was loading off a ton of its shares, and then all of a sudden, Nphase went from highs of 339 all the way down to lows of 31, losing 90% of its value. So if you think that it's a good buy now, be my guest. I hate companies like this. I cannot stand them. Anytime that they rally just even a little bit, it's up 4%, cool. I think that if you're a beginner and you're really trying to establish healthy habits, I think avoiding companies like this are in your best interest. Can I explain why? Is it easier to swim with the current of the ocean or against it? This thing is incredibly bearish. It's forming lower highs and lower lows. It might have a few green days, right? And it has a nice little recovery, and that's where they'll really get you, right? They'll really try to encourage you to, hey, jump into this. This thing's going back to what it was. That's always what they like to say, right? But if you look at its true direction, it's incredibly bearish. I'm not here to say that it's always going to be like that. I'm just saying that, hey, read the writing on the wall. It's incredibly bearish for a reason. So if you are trying to make money right now and establish healthy habits, I'm not here to say that you can't make money trading something like this because shoot, it's up 4% already. It would be ignorant for me to be like, it's impossible to make money on this. No, it's not impossible. But that's not the reason that you are choosing to trade or to be calculated. You're trying to be intentional, build and establish healthy habits. And I think avoiding companies like this are in your best interest as a beginner. Once you have a little bit more experience and you have good risk management skills, good entry skills, good exit skills, and you're a little bit more conditioned and experienced in this market, trade risky stocks because at that point you can make more informed decisions. I just don't think, and again, this is me, I guess, being a dad or something, but if you're really trying to be a calculated beginner trader, I think avoiding companies like this is good in the beginning. You guys let me know down in the comment section what you think. So they got earnings coming up. Cool. I still don't care. Because remember, any stock can go up in a short period of time. GameStop at one time was up, 1,000% or 500%. It's not the point. Anything can cause, especially in this current market condition, any gimmick can cause a stock to skyrocket. That's not what you're trying to do, right? You're not here trying to just take advantage of gimmick opportunities. You're trying to actually understand why to enter a trade, why to exit a trade, why a stock is moving the way that it is, and why it could potentially be reversing, right? Could go going long or going short, whatever the case might be, that you build your understanding of that move and also your edge of how and why you see value in that. I just don't think that this would be a great start because these tend to move very quick and you need to learn how to walk before you run, right? All right. That's just my opinion. That's probably not the feedback that you wanted because maybe this thing will go up to $40 or $50 per share. But again, maybe you're a little bit more well-versed, right? So that's okay. You're okay with taking advantage of momentum plays. So please understand that when I say the things that I'm saying, it's not to convince everyone to avoid this. Just beginners, I don't think it's the best. That's all I'm saying. Let's do Hood. Yeah, I also saw Coinbase was up a decent amount during the pre-market hours. This stock does not stop. And what I mean by this is quite literally what I'm saying. So is Robinhood stock a cheap stock to buy right now? Heck no. But is it a bullish stock with great momentum? Yes. Higher highs, higher lows. I think that we can all see kind of what's happening here. Very similar to what we saw when it IPO'd, right? And then it came crashing down. We're in a Bitcoin crypto rally. Everything is pushing up because of the weather, because things are great according to these markets. Again, if you're trying to make money right now, just as a day trade, I can see why you're paying attention to Hood. I can see why you're paying attention to these incredibly bullish stocks with great price momentum. I think it makes complete sense. But if you're thinking about investing long term, I personally do not think it's a safe buy. I think there's too much retracement potential at these overbought levels. In the short term, if you're just trying to day trade this and get in, get out, manage your risk, make your money, and you bounce and you close out your trades every day. If you know how to do that, it makes complete sense. I can see that this stock can maybe go to 120, right? 125, maybe 130 by the end of the week if momentum continues. And if the CPI data report supports the case that it's actually lower than what was expected. If inflation comes in lower, again, that will most likely up the chances of the Federal Reserve cutting rates sooner than later, can cause the market to push up, causing crypto, therefore Robinhood to also push up higher. That's all a possibility, right? Direction is in your favor, sentiment is in your favor, and momentum is in your favor. So yes, I would say that this would be a decent stock to pay attention to this week, not because it's a good deal, but because direction is simply in your favor, direction and momentum. So please do not get it twisted with what I'm not saying, right? UNH, please. It seems to be heading up. So I think I wanted to make a video about UNH because people are choosing to trade this stock, which is, again, you guys are all adults. You can do whatever it is that you want. In my opinion, UNH is not a stock that I would care to trade. Maybe it's because of its intraday, its recent setup of it selling off. It would make sense to short, but I've talked about UNH. I feel like I want to follow up with another video that talks about the fundamentals and the technicals. UNH is oversold for a reason right now. And it's not because of a fundamental reason. It's because it's being investigated for possible Medicare fraud. UNH is a very cash-rich business. It's one of the largest, if not the largest, healthcare company in the United States. It's a juggernaut. It's a cash printing machine. And it recently sold off about 50%, which means for every 50% a stock loses, it offers 100% for its recovery. And in this case, 130%. So how crazy is it that there's an opportunity? Think about this, that from 250, if it goes to zero, that's $250 that you can lose, right? If you lose 100%. 250, you can lose 250 per share. But if it goes back up to where it was, 500 plus, that means you could double your money, and therefore your risk potential is the same as your profit potential. When has that ever been a thing, right? Well, actually, your profit is greater than your risk, and that's if the company goes to zero. That's the thing that I find to be so interesting about this company and this stock, is that fundamentally, yes, it's there, but during this investigation, we don't know how long it's going to take. There could be more negative news that can drop this stock down to $200 per share. So again, if my intention was to make money right now, I would not be trading or investing in this stock. It doesn't normally move that way. Based off of this recent, drop because it gapped down a little bit quicker, yeah, there's some possibility for this thing to try to uptick. So if that's what you're looking for, I can see why it is that you're paying attention to it. But what I'm saying is the big ROI, I think is in either, if you think the company's going to fail, then short it, right? But if you believe that this company is going to recover after they drop the investigation behind it, then that's where, in my opinion, a lot of money can be made. But it doesn't mean that you have to do it in a uncalculated way, right? Watch your position size. Make sure that you can stomach the time that it might take for this stock to recover. So again, if you're trying to make money right now, I would avoid UNH. If you're in it long term and you can stomach and tolerate the timeline and more potential, downturn, then I think UNH has a decent setup worth looking into, right? It would definitely be in my watch list. But again, that's just my opinion. You guys let me know what you think. Let me go ahead and do one more. TTD. What does that sound? Is that the... Dropped all the way back down to 53. I love to see it. Yeah, look at that. Back at $55 per share. Okay, so I can see this as a potential dip buy opportunity, but I can also see this as why someone would be trying to just buy the dip for a possible dead cat bounce. That's a setup that a lot of people like to play. I do want to remind you that just because the stock is cheap it could always get cheaper, right? Don't ever think that just because it's sold off, it can't sell off more. But there is a common trading setup that's called the dead cat bounce, and it's when a stock sells off so much. I mean, this is a substantial sell-off. Let me go ahead and look it up real quick. A 39% sell-off, yeah. So by it selling off so much in just the day, it could possibly recover, let's say 5 or 10%, right? Or 3%, 3 to 5%. That's a huge day for a lot of people. So I can see why this is in people's radar. But what I'm here to remind you is just because it sold off a lot doesn't mean that it has to recover. It can continue to sell off, but I could 100% see why you're looking at this for a possible intraday trade. If I was a beginner, I would completely avoid this. It's just too risky. But when a company reports earnings like this that causes it to sell off, it can move very quick. It can be very volatile, and I don't think it's meant for beginners. I know that's very boring of me to say, but you know it's true, right? You need to learn how to walk before you run, and this most likely will be a very fast-moving stock. So just my 2 cents. Of course, Ignacio, thank you for tuning in. SMCI, I was just going to do that one, but SMCI because we have to talk about it. Didn't this one just report earnings? Oh, yes. I love it. Remember when everyone said that SMCI was going to go to the moon? They said it was going to go to $1,000 per share. Remember? If you guys remember back in early 2024, I was making videos about SMCI when this thing was pumping to highs of 110. And I said, hey, I think this is a BS company that was growing more in price than NVIDIA was. And this one was growing in price just because it was partnered with NVIDIA. It was a complete gimmick. It got investigated for accounting fraud, and it went from $122 per share all the way down to $20 per share. Think about that, losing 85% of its value. It's, in my opinion, the same thing that's going to happen to a lot of these overhyped up companies right now. They become so inflated, the rubber band gets stretched so much that it snaps. And every time that this company reports earnings now, it drops like an absolute rock. And I love to see it because it always does eventually try to recover just to give it all back. So again, if I was a beginner, I would avoid a stock like this. Too volatile, too risky. But based off of recent time frames, it looks like it has a common resistance range right around 62, almost 63, and a common support range right around 27. So, but this is the thing. It sold off so much, it could just try to find a support to recover. Remember, the stock was uptrending not because it was a fundamentally good company. It's just a company that is riding off of hype. Market conditions are so favorable in feeding and fueling these BS companies. This happens very often, right? During these bull runs, there's these gimmicky companies that just try to piggyback off of the momentum of the rest of the market. And they do for a while until, again, it all falls apart. Everything drops, but then these stocks are always the ones that have the most significant drops. 80 to 90% of their values are wiped out in just a number of days, right? So excited to follow up, excited to see what this week has to offer. I do want to remind you, CPI data report, inflation report on Tuesday, 1 hour before the market opens. We'll talk a little bit about that in tomorrow's video. I'll just make sure that I break down previous inflation reports, what the market is expecting, and what you can do to prepare. All I literally ask you to do is subscribe to the channel, and hopefully you can consider dropping a thumbs up. Again, if you ever want to watch me trade live, you also can click that second link in the description down below and join LPP 3.0. It's officially out, so if you guys want to learn more about it, second link down below. It's a one-time payment, lifetime access, and again, daily live sessions every single day right at market open for about 30 minutes to an hour. Like always, let's make sure that we end the year on a green note. Take care, team.